Welcome back. It's 4 p.m. fill time. Your fill of the markets this week. I'm joined by my younger brother and Savannah's Associate Director. Sam, let's rip in.
Thank you, Jack. It's great to be knocking off with you.
Indeed. Now, it's turbulent times in the markets, and there's probably been a bit more red than green, despite their drink choice. So, what's going on?
Well, Jack, further pain on markets this week. The ASX is down 1%. The S&P 500 is down 2.5% so far this week. And Jack, your Bitcoin is down 12% for the week. More positively, if you're in the northwestern part of the globe, UK and British stocks continue to buck the trend. They're up moderately at 0.4% and 1% respectively. So the big headlines for the week. Well, overnight, Donald Trump announced that tariffs on Mexico and Canada will come into effect on the 4th of March as planned. So much for my prediction that it was all a big bluff. And Jack, the other big news for the week. Nvidia announced their much anticipated quarterly earnings. Their share price has fallen 15% this week, led by weaker than expected gross profit margins. Jack, last week we talked about the underperformance of the Magnificent Seven stocks. Well, they have fallen another 7% this week. I've been reading the tea leaves for US markets, and I think all signs continue to point down in the near term. That's something I want to talk to you about a little bit later, but for now, it's time for everyone's favourite segment. It's Jack's Hot Take.
Well, it's a hot take for a hot and spicy part of the world this week. Sam, India is rising, and I'm long on a strong, prolonged Indian surge. It's no secret that India is among the fastest growing economies in the world. There are 3 key reasons why India is on a very good wicket. The first is a favourable demographic profile. India boasts a young, growing workforce with a median age of 28. This profile, combined with an increasingly educated, skilled population built for the new world, with STEM being an area of substantial expertise, means India is primed to produce a rising middle class to rival or perhaps even exceed China's growth era. The second factor is their resilient and robust economy. India's areas of prosperity are far from narrow. There are many industries fueling their growth, ranging from steel and resources to manufacturing, technology, agriculture, pharmaceuticals, and even e-commerce, with the fastest growing online economy in the world. In other words, their GDP growth is not imbalanced or overly reliant on 1 or 2 industries. Thirdly, and perhaps most significantly, India stands to benefit from tremendous geopolitical tailwinds. Western countries are shifting supply chains away from China, with India the main beneficiary of this trend. And most pertinently, Sam, India has forged terrific relationships with almost all powerhouse nations, including their increasingly warm relationship with the USA. Modi recently had a highly productive trip to Trump Town, signalling a continuation of India being a key manufacturing hub for major companies like Apple and Tesla, despite these companies committing to more local production. The warm relationships also create more certainty for continued foreign direct investment, which has been catapulting the Indian growth story. And here's a fun fact. To drive home the point, India is on track to have the 3rd largest economy by 2030, surpassing the likes of Japan and Germany. Despite getting trounced in their recent test series in Australia, the country and their cricket team will surely enjoy the golden age. And ETFs like ASX's NDIA are primed to capitalise on the India rising surge. And Samuel, that is this week's hot take. And so the time has arrived. It's what we've all been waiting for. Sam's Market Insight. Take it away, brother.
Okay, Jack. We've talked about record high price to earnings valuations. We've talked about the recent sell down of Mag 7 stocks. It's time to stop beating around the bush, and I'm just going to come out and say it. I think the market is due for a meaningful correction, and I think we've just entered it. Here are the 3 reasons why I think markets will trend down in the near term. Firstly, stretched valuations relative to earnings growth. Jack, we've been through this. Enterprise value to EBITDA multiples in the S&P 500 are the highest they've been for more than 20 years. Now, Jack, high valuations are fine, so long as companies have the growth profile to back it up. This brings me to my second point. Earnings growth has flatlined over the past couple of quarters and even decreased between June and September last year. In this latest December reporting period, We've also had the Mag 7 stocks produce practically zero earnings surprise. The last time that happened was in 2022, which also happens to be the same year that the S&P 500 fell 20%. Exacerbating these dynamics, it appears that the AI gold rush is faltering. DeepSeek's breakthrough in developing higher performing AI models at a fraction of the cost has undermined confidence in US tech's ability to justify its massive AI investment. If they can't maintain a competitive edge, investors may start to rethink their bets. The third point is the broader macroeconomic backdrop in the US, and inescapably the Trump wildcard. The advent of tariffs has rattled markets. Consumer sentiment has dived 14% over the past 2 months. Meanwhile, inflation expectations for the year ahead have increased to 4.3%, the highest level since November 2023. Elon and his Doge department have also undertaken to cut spending and remove hundreds of thousands of government jobs, which could lead to job losses in the millions once flow-on effects are accounted for. While it can be argued that lower deficits and more streamlined spending may augur long-term benefits, there is likely to be pain and turbulence in the short term. So there it is, Jack. High valuations, weak earnings growth, and shaky sentiment. 3 solid reasons why I think the market will keep trending down in the near term. But look, no one can predict the future, least of all finance boffins like me. And for investors willing to ride out the volatility, I still think the long-term investment case remains strong.
Very good analysis, Samuel. I'm impressed. Well, I hope the Terra Messalata is on sale at the shops, because I reckon I'll be buying that dip. Anyway, it was fun, it was insightful, with arguably a hint of genius. And that's a wrap for this week's 4pm Fill. Please subscribe if you did enjoy it. I'm off to the pub for a lemon lime bitters. See you next week.
Cheers.
Boom.
Good work, mate.
Yeah. Excellent. Excellent.